Hello, Randy Williams, Keiretsu Forum. Here today talking about the risk and opportunities of angel investing. But more importantly, when does an angel really get comfortable with his or her decision to pull the trigger and make an investment? There's a lot of wonderful dreamers out there, and we fortunately have close to 800 companies we have funded over the last 16 years at Keiretsu. But it has to go past the dreamer stage before we actually decide to write a check, take that leap of faith. Today, Peter Henry, wonderful member of the last 3 years, we're going to be talking about that tipping point aspect of when we pull the trigger. Peter, why don't you introduce yourself, your background, and also your passion of education. And so let's talk about your background first.
Sure. I'm a serial entrepreneur by nature, I think, starting from literally when I was a teenager. Moved out here to California in 1980, which was obviously a pretty opportune time to be landing in Silicon Valley to go to school. And I've been mostly a technologist in my early years, but wound up eventually becoming more of a business strategist and helping the businesses that I was involved in sort themselves out, get their direction focused. And starting about 16 years ago, after having launched, I guess, about my 7th startup and finally making something profitable out of the two of them and selling those, I became an angel investor and mentor to a number of other startups along the way, bringing sort of ideas, mentorship, and money, as the case may be, to a bunch of companies over the last 16 years. So
you bring a fresh perspective of not only being an angel investor, but also you've been on the other side of the fence, obviously an entrepreneur. So you have great empathy. So before we drill down on the subject today, you also launching something at Keiretsu Forum in the ed tech space. What is that all about?
So Keiretsu Ed is our new, if you will, our expanded initiative to really kind of strengthen the investor community and the angel ecosystem by bringing information, education, and interaction to investors seeking to do a better job of investing, smart investors make better investments and get better outcomes, as well as entrepreneurs who need to know more about the process, need to know more about how to get to yes, and how to make a success out of their company, because it works as a win-win on both sides. Smart investors and smart entrepreneurs get better outcomes.
Right. So you love education. Now, you said you went to school in the 80s in the Valley. Are you saying Stanford?
Yes, I am. And I know you're a Bear. So.
Go Bears.
And go Cardinals. It doesn't feel the same cheering on the color versus the
a wonderful school. So let's drill down about pulling the trigger. So obviously, there's a lot of data points in pulling the trigger. So when do you get comfortable to write that check? Wire the funds? How long does it take? What's your evolution before you decide, I'm going to make that investment?
So, we always invest in people and ideas. But to me, the people and ideas are always exciting. We see a lot of companies with a lot of cool stuff and good people. But it's that point where you realize that they have real clarity about their market, who they're going to serve, what they're going to do, not trying to get a little tiny slice of an impossibly big pie. You see some companies come in with telling us about the billion internet users or the 125 million households in the US, and they're going to grab 0.1% or 1%. I like to see companies understand their market well enough so that they can articulate a market that they're going to own, that they're going to get 30, 50, 60, 90% of, because that means they know exactly what they want to do, who they want to serve, and how they're going to get there.
So Peter, maybe you can draw upon specific examples, and also what space is it that you like investing in first?
Okay. Well, a specific example of a company that's got a really good handle on their market. I've seen a couple of them recently in Keiretsu. One of them, which I know you're familiar with, is Savara, where they have a delivery device for medication specifically for a particular kind of patient, CF patients, and they get it. They have a device that has a lot of broad uses, and someday it could be big in a lot of different areas. But they understand that they're putting their arms around a very, very specific subset of a marketplace, and they're going to own it. So I really like them. There's another company that I've just done due diligence on called CardioThrive, which has what you could call just the next generation of AEDs, automated defibrillators. But they're changing the game in a way that will make the standard of care completely different, and they understand exactly who they need to serve.
Have you invested in either of those companies?
I missed out on Savara, but I am a likely investor. We're just working on closing the round for CardioThrive, and I will be an investor in that.
So why will you be an investor there? But before you answer, I'm going to give you a little time to reflect on it. Why I invested in Savara, as an example, is I remember him standing up, and he said, well, I had, he said 40. So between 30 and 40x on my last company, my last startup that I created. And I said, okay, congratulations. How many of your past investors are in your new company, Savara? He said all of them. Perfect. That was a big validation point for me. So getting back about you pulling the trigger, why are you going to pull the trigger on this next opportunity?
So this opportunity differs a little bit in that the entrepreneur is a little bit younger, a little bit less experienced in one sense of the word, but similarly very poised and very clear on what he's doing. He's got a little bit of background in leading other startup ventures and being involved in them, and he's bringing along some of his past investors. But the big thing that I really like about it is that he completely understands the notion of retaining focus on a journey where the road's always shifting underneath you. And he knows that some things are going to change, and he knows that there's going to be adaptation, but he gets that there's not going to be something that comes along and just throws him off the path, and he's not going to get back on it again. So I love that focus, and I love his understanding of a mission. I also love the altruism of what they're doing. I mean, they are going to literally save thousands of lives, hundreds of thousands of lives. And it's a product, one way to put it, and I think this was also true of Savara in their own way, is that they're putting a product out that's what I call an inevitable. It's going to happen. So it's not a question of whether it's going to happen. It's a question of who's going to lead it to fruition and who's going to reap the rewards.
Now, your wife and you, is social bottom line investing important? And the definition thereof is, hey, let's make an investment, let's get a return, but also let's do good and have an impact. Impact investing, is that important to you?
I think that's very important. It's critical, especially because you can get a great return so many different ways. But the idea of wanting to change the world, I mean, to me, that's sort of embedded in every real entrepreneur, is they want to change the world, ideally for the better. And if you're just in it for the pure monetary reward, then you're probably not really in it as an entrepreneur. You're just in it for the money. So
the theme today, tipping point, when you pull the trigger, when you really get comfortable with an entrepreneur, when she or he, the CEO or the team, you get comfortable with. So how do you not get ahead of your skis and pull the trigger too quickly?
That is the really hard part, and I've had to restrain myself on more than one occasion. I know you're an enthusiastic investor, right? And you've made a bunch of different investments. You get comfortable not just with the presenting company, but with the people that are surrounding them that are also interested. And so I've had to hold myself back when I see a lot of enthusiasm, but I still don't quite understand it. I mean, I'm a tech person, so I can vet a tech company by myself. But there are so many other arenas where I know only enough to get myself in trouble, and I've had to pull myself back and make sure that I
Good, you have more discipline than I. But entrepreneurs that might be watching this program, create an FAQ, frequently asked questions, because why answer the same question over and over? Create 20 questions you've heard and addressing and focused on the answers, give it back to us. Myself as an investor, as I get older, I'm looking for more collateral in my real estate investments. So I always look for security, and I'm getting it. I'm asking, not always getting, but I'm getting now security, personal guarantees from, obviously, the general partner or whoever's the sponsor of the opportunity. They have to have a strong net worth, support possibly the guarantee. But it's fascinating when you ask the question. It's like, Peter, I'm going to give you $100,000, Peter. Oh, by the way, I want some type of collateral. I want some type of guarantee from you. It's fun to watch them wince around and say, well, that's I don't do that. I go, why not? Have you ever thought about it? It's fascinating. If you really believe in yourself, why not give something back? Obviously, in startups, they have a dream, they have equity. Then I look at, well, gee, I need AR, I need accounts receivable, I need something to back up what I'm trying to do to, help you. So tell us, tell me about getting back to when you pull the trigger. What are all the answers addressed that make you comfortable when you invest?
Okay, skin in the game. That absolutely matters.
Of the team, of the entrepreneur.
Of the team. Mm-hmm. Clarity of focus on the product or service and the market that it's going to serve. Definite milestones mapped to funding. That's a big one, because sometimes you'll see a list of milestones and they'll come in saying we need $500,000 or $1 million, and you're not quite sure how the two connect, right? But what you want to see is that they're going to get to some really serious milestones that change their valuation for the better before they run out of money. Mm-hmm. I look for those three things. I especially look for a team that is reasonably complete or getting there quickly, but also one that's ready to interact. You know, as an angel, I can't help but get involved. Mm-hmm. I can't help but ask questions and be sort of part of the process early on. Not to the point of being a pain in the neck, I hope, but you really want to be involved and bring both experience and learn from what they're doing. And if all of those things come together, then we're about 90% of the way to pulling the trigger.
Okay, so let's fast forward. We only have 2 more minutes of this first segment. So let's just say you pull the trigger. Mm-hmm. Are you saving capital for follow-ons after they meet their milestones, or are you just going all in with the capital that you're comfortable with and just letting, obviously, the company go to the next level, hopefully toward an exit? Or do you save money for follow-ons?
I always assume that I want to be involved in follow-on rounds. Mm-hmm. And so I always assume that there will be some amount of capital that I'm going to have to hang on to or be prepared to liquidate elsewhere to put into a future round. But it's important that only happen if they've executed properly. Mm-hmm. I don't want to come in and be a rescuer. I want to be throwing more chips onto a winning table.
Mm-hmm. Now, do you like adult supervision? You like giving them advice, or you like being passive and letting them run their company?
If they ask questions, I love being part of the team that helps guide them. If they want to go along on their own, I don't want to get in the way. So it's a bit of a balance. I tend to be one that likes to stay involved, at least from an awareness perspective. But I also like at least meeting with the team, knowing what's going on, being updated on a regular basis.
Okay, in segment 2, and we're concluding in the next 10 seconds, is that we're going to be talking about some of your investments. Mm-hmm. We don't want to not hear just about the good investments. We want to hear about the bad investments and what went wrong. Did they fool you? Or what happened exactly? And also we're going to talk about education of entrepreneurs and moving them toward a path of liquidity and exit for both the angel and also themselves. Thank you, Peter.
Thank you.